Hi, how are you today? Today, I want to explain in accounting the capital expenditure. Capital expenditure. Okay, capital expenditure. Okay, capital expenditure. So this is an expenditure upon acquiring non-current assets. Okay. This expenditure results in the acquisition of a non-current asset. Okay, that's what we are calling capital expenditure. Then any other expenditures when you are adding value to the existing non-current asset. Existing non-current asset, any expenditure incurred when adding value to an existing non-current asset, we classify that expenditure as a capital expenditure. And then also the expenses incurred when bringing in non-current assets. Expenses incurred when bringing in a non-current asset. When bringing in a non-current asset. Okay, and then let's just clarify also before I give an example to say this appears in the statement of financial position. Statement of financial position. Okay, that's why you show this expenditure. It's not charged against profits in the statement of profit or loss. So let's give an example. Okay, if you buy a car, you buy a car in China, a car in or let's say Japan. Okay, you buy a car in Japan where you're gonna have a cost of a car, which is 2,000 kwacha, and then you also have incurred transport, which is going to be 500 kwacha. Okay, 500 kwacha, and then you're going to incur insurance. Upon acquiring this car, you need to insure it, which will be maybe, let's say, 150 kwacha, and then you also pay the levy, which is duty, 900 kwacha. Okay, so your total of expenses comes to 3,550 kwacha. All these we are saying the capital expenditure. Capital expenditure. Okay, why? Because this is clarifying this statement. We are saying expenses incurred when bringing in a non-current asset. Okay, all these costs will be added to the cost of the non-current asset, just like I explained in the assets which builds themselves. Let's say you are constructing a building, and then the builder builds like a small shelter within the main premise. All those other costs will be added to the cost of the main building. This is what is happening here. All these costs, they will be added to the cost of this non-current asset, and we are calling them as the capital expenditure, and they're going to appear in the statement of financial position as the total cost of this non-current asset. Okay, this is all I had to explain on the capital expenditure. Let me just quickly also explain a bit on the revenue expenditure. Okay, so revenue expenditure. Revenue expenditure, revenue expenditure, my line is bad. Revenue expenditure, this will be expenditure for the purposes of making a business, okay? Of trading, for the purposes of trading. Okay, the normal expenses a business makes, like purchases, salaries, those are what we are calling as a revenue expenditure. Salaries, any other expenses, let's say rent and rates, okay? All these other expenses, they are classified as revenue expenditure, okay? And also expenses incurred to maintain, maintenance of non-current assets. This is classified as revenue expenditure. Expenses incurred to maintain the earning capacity of a non-current asset, they are classified also as revenue expenditure. Okay, so I'll send through the notes. I'm sure they will do the usual explanations about the differences between these two, and also about capital income, revenue income. I'm sure the notes, when you read through the notes, you'll be able to distinguish. My main purpose was to explain on the capital expenditure, especially this small example, but it's very much important. Thank you very much for your time. This was a simple topic, but very important. Thank you for your attention. It's been Moses.